Because if you can understand supply and demand and the way the market works, that's what's going to make trading the indicator so much easier. At 20,000. Okay, so the bands are wide today, guys. Whew. So the other thing to be aware of too is that after elevator downs like this, and this is something I wanted to preface as well, when you have elevator downs like this, volatility typically goes up. Volatility is less in movements upwards. Okay. Buy now, send forget. I may buy like 1 micro and just set the freaking stop down here. See what happens. But during downtrends, volatility is higher. During uptrends is when volatility starts to tank down. That's why you see these bands so wide. All right. So, but again, I think eventually this gap has to be filled. Now we just don't know when that is. Okay. That could be today. It could be tomorrow. Could be Friday that this gap gets filled. Okay. We could base down here for a minute. Okay. But what I would love is potentially even another failed breakdown here. So even if it passes through 20,732, if it re-enters, oh my gosh, that would cause a massive squeeze. Okay. So now looking down here, 2741 has had 2 failed breakdowns on it, right? It's had one here. It's had one here. So it's had 2 failed breakdowns. So I think a break of 2741 and somewhere between this zone, like if it breaks 2741, it's probably heading down to 2735. So if it breaks 2735, that is likely going to cause that's likely going to cause the meltdown here. So we're going to make this red. We're going to make this one orange because this one's kind of the mid. All right, because again, now we're back to trading in this range over here. Okay, so we're trading back in this range. And we had multiple failed breakdowns here off of 2728. Okay, so anytime you have an area that's had multiple failed breakdowns, it becomes, I guess, once it comes back to it is where it's more likely to have a breakdown. Like if it doesn't squeeze and claim a previous level, it has a bigger likelihood of ripping back up. Now now we have a new president, and so that makes me think it might cause some more movement, but not. I'm just saying, when I say FOMC causes the most movement, it's like they're all not made equal, right? There might be times when it literally does nothing. Which would kind of have that scenario here. It really didn't do a whole lot. 245 ticks downward. And then the Asia session just filled the gap right back up. But so the point is we don't really know, right? It's probably, we don't know if it's going to look like December 18th again. We don't know if it's going to look like that in January. All right, so we have no idea. So it's just something we have to be aware of. All right, now, again, we still have this gap up here to fill. We have not filled this gap between 06. It would require a price to come back up here to 6130 to refill this gap. All right, so we still got some room up here. And what would really get me juiced is if FOMC fills that gap, which I think is a potential because, again, of the new president, the economy is doing a lot better. And yeah, things are looking better. Now this really established itself as the low yesterday. All right, FOMC caused a little bit of movement, but then obviously plowed right back up after any sort of movement down. So I actually did take a position on gold yesterday. I forget which one of these it was. It was probably this guy. It was probably this guy. Once I saw these 2 candles of resistance, and then a new high painted there, that's where I took a buy off of this lower end volume because gold just looks so range tradey that I'm like, I don't think it's going anywhere. Even after FMC, it tried to break down and then pushed back up. So yesterday, obviously, 2783 was the key to keep us up in this demand zone, and you can see it played out pretty nicely. Just about came down and touched it, but it did not make it all the way. And now we've busted outside of this upper order block in the overnight session. And now we are barreling to the upside. So honestly, for me on gold today, there's nothing really to do besides wait for a re-entry Why is that so high? You could probably adjust this down just a hair. Still not exact, but there's really nothing for me to do on gold today except to wait for a re-entry of this level here. Okay, other than that, there's nothing to do. If you remember me, I was kind of surprised at that point that we never back tested 6,000. But now we did come up to it here, but we had already reclaimed this breakdown because we never had a retest of 6,000. It came down and never back tested it. All right, so this was kind of a clear moving of a potential bullish takeover. And then obviously for a breakdown trade, which again, breakdown trades have considerable risk. If you're good with like, you know, there's a 60 to 80% chance it's going to fail. Okay, that's what you have to be doing on a breakdown trade, on a full breakdown. A full breakdown comes with a break of price from a previously tested highly key zone to a demand zone.